All right, ladies and gentlemen, welcome back. It is Monday, May 15th. We got another chart talk coming at you live during market hours. We got about 20 minutes till the market's closed. We got another very tight range, small volatility kind of day on our hands. The market's been just chopping around in the tightest range. Last week on the SPY, I noticed it was the tightest range week from on a nominal basis, meaning high to low, not even percentage wise, since August 2020 when the S&P was in like the SPY was in like 360s or whatever. Last week's range was so incredibly tight. I was checking all the weeks high to low. It was like the least volatile week we've had in almost 2 years, when we've got a lot of underlying action. What'd you say?
I was gonna say, like, we had like a pretty big, we had CPI, we had Fed. It was like not like a quiet week.
That's the interesting part to me. It's like, it's not like, we're in the middle of the summer or we're in that low volume environment. It's the market's just in such an indecision phase that it's just chopping around such a tight range. It's I'm wondering, there's two scenarios that play out. It's becoming an inflection point in my mind. Either we pull back to the bottom half of this range. Let me bring the SPY up. Let me share my screen. All right, so to give a little bit more context, this is the area we're talking about. It was just such an incredibly tight week where nothing's really happening. And obviously there's a lot of action under the hood, but still it's just this range-bound trading, indecision. Every time it looks like we're going to sell off, we recover. Every time it looks like we're going to rage, we just kind of slow up at the top end of the range. My thinking is, they've been trying to take these things down. I was coming into the week a little bit cautious. I'll tell you why. So we're seeing the market, we're seeing the mega cap tech leaders win. This is Google chart right here. We saw this breakout like crazy. Here's the Apple chart. Obviously been on an absolute tear. Microsoft, same thing, momentum flagging here. So my thinking was, in the newsletter, it could be slightly a pullback time for a lot of these names, because if this Microsoft, for example, if it wanted to, pull back to the bottom end of this range, if this Google wanted to consolidate these gains and kind of fill this gap, just fill this little gap at 113, kind of pull back to this 112 area, that'd be absolutely fine for the market. And then another key one was Tesla, where Tesla had great news last week, in that Twitter announced a new CEO. That would be outwardly good news for Tesla, because Elon can get focused again, right? That could be his main concern, is Tesla, instead of worrying about Twitter every single day. And we saw that viciously sell off on the news, became a complete sell the news situation. So those kind of things, kind of leave the market on kind of shaky ground. If these things pull back, it'll bring the whole market with it. So I'm coming into today a little bit cautious, but we're still seeing that constructive action. Microsoft holding this little tight little range, now will give us 2 inside days with the 8-day moving average catching up. This breaks higher, I'm going to buy this one back through 311 and just kind of ride out that one. But if they want to pull back, that's absolutely fine too. And I think they could pull back. And what that would do is just kind of bring the SPY into the bottom end of this range. But we're not seeing that. So the two kind of scenarios in my mind, if the bears can't take over this area, it might just lead to a S&P breakout. Now I'm not expecting a broad-based breakout. Breadth, meaning the number of stocks advancing versus the number of stocks declining, is terrible right now. A stat came out, we were talking about this before. Now Apple's worth more than every single company combined in the Russell 2000. Things like that aren't great for the market when there's just such narrow leadership. So I'm a little bit cautious. There's still a bunch of earnings names I'm waiting on to set up for higher prices, or waiting to consolidate a little bit more. Overall, it's just like kind of slim pickings out there. So a little bit cautious. I'm putting risk on still because we're seeing that great action, but not overly excited about the market. Not, I just think we're going to be range bound for a little bit. Whether we chop up or chop down, I just think we get chopped.
Yeah.
That's broadly what I'm thinking. I'm not putting too much weight behind any of these ideas. But again, we haven't sold off. We're not seeing stocks sell off. We're still seeing that constructive action. There's nothing really in the price action that's telling us to just abandon right now, as much as bears want you to believe that. But that's really it. It's tough to have major conviction in anything right now because, again, such a low volume environment. just chopping back and forth in a tight range. It's like the market's waiting for something. We don't know what.
Well, yeah, it's like
So
you have even like the major talking points. So you have like the major like issues are like red flags for the market. So we had, the Fed raising rates super aggressively, and now they're starting to pull back on, which they've left no indecision, like you mentioned, of like what they've been wanting to do, which takes some fear out of the market with those decisions. You had a big fear about inflation. Inflation has kind of come down enough from where it was kind of last summer that again, it's kind of like an old story, like that's not as scary anymore. We had the regional bank drama that could have really, unraveled much worse than it was, and that didn't even shake the market off. So now it's like if we go back to lows, like what's this new, like what's the fourth door of like this next new scary? It's like that meme like when Kramer like mentions a stock and then like he just keeps killing these companies, and it's like the next
yeah,
door of like what's going to be
yeah,
this
yeah, yeah.
next fear that's going to like freak everybody out to send the market back to lows. And then what would be the potential catalyst that would send the market through the upper end of this base that we've been in for a while? And on both, it's like who knows, what could be behind either of those orders? And like I honestly don't know. But the tighter this week continues to get, eventually, like we know with like any wedge or any consolidation, the tighter it gets, at some point, someone has to push the envelope. The buyer has to take control, or the seller does. In either capacity, it's like if we roll over, we have a very defined area to de-risk and sit in cash if we do want to roll over lower. And if we are poised to break out higher, we have these very low risk entries, like you mentioned, like Google and these other names. So it's like it's kind of a waiting game, but that's always like if it's to push lower, what could that what would that catalyst be, or what would that be your full new free Fred line be? Because it's not, I don't think it's gonna be any of the older ones. And if we do break out higher, what could that have? That's just more for the group of like what could it potentially be. I think it's more the thought for the time being while things are slow.
Yeah.
And then just sector wise, let me share my chart really quick. Okay, just on a couple sectors really quick. Again, the REITs continue to just base out here, pretty nicely. They've kind of like lagged compared to some of the other sectors, like the consumer staples that have just made a much broader push from where they were basing in the past compared to these REITs. They're still kind of like the bottom right hand corner of their base. And then we have utilities. So utilities also still kind of flagging out here, which isn't really the best thing you want to see. It's like the risk off sector that people are grabbing towards when they're a little fearful. So not excited to see this sector kind of flagging out. But again, consumer staples, consumer discretionaries still kind of working its way out of its base, which is a decent sign. We're seeing consumer staples breaking out and trying to break out of this, its prior major resistance level and work its way back towards all-time highs. Again, healthcare was pretty strong, kind of rolling over. Tech still strong, working its way towards a retest. Nothing glaringly weak. Again, energy kind of right down here on this, support area of the wedge it's been in for, the past year or so. So we'll see if this is a good support buyback opportunity, or is it going to break this wedge to the downside? You have very actionable levels of where that would be. If it's going to break down lower or higher. I think financials still, even with the regional banks up, I think it's just broadly an avoid. I really feel like we need to really push through these lows in the financial sector broadly before we're going to see any real like shakeout and move higher. So I think that's just like a broad avoid. I think just we avoid financials for the time being. To some individual names, again, we've been watching this DHI for the past week or two. I just got into it earlier today, and we were watching this like 109.50 seller. I was just kind of holding DHI down, for the better part of all last week, and just finally started to, push a little bit higher today. A little kind of fake breakout. I feel like we're kind of back at T3. I was watching the 15-minute this thing breakout. So it's in it now, and I'm just giving it some room. I feel like a lot of my trades recently have been way too tight with some of the stops and the ideas that I've liked the most, and they've worked out higher where I have kept a bit of it on this DHI, so I'm just going to give it a little more room than keeping it super tight. One name I have no read on that I'm like taking off my watch list is PODD.
I
got into
I took that off my watch. I had annoying trading it too. Like,
oh god,
right when they had earnings, and I just kind of gave up on it. I'm like, this is
yeah,
a grinder or something. I don't want to deal with that right now.
Yeah, I got in on Thursday. It like ticked me in. I was way too heavy. I just like forgot about the buy stop that I had in from the day prior. Like ticked me by like a few cents. Yeah, the high was 326.40. I bought 05s. Takes up prior low a day. 2% move, like a nothing day. and then goes Friday and then like completely reverses today. And it's like, I just have like no read on this stock. So this is definitely off my radar for now. But again, broadly still looks great. Just the day to day is just not, it's not a good read on the name. But a couple other names setting up. We have this IRM. So we talked before about the REITs basing nicely. This IRM is flagging basically near its all-time high. So this is one of the stronger REIT names within that sector that is basing. So if the REITs were to break out of its base and this name's flagging near its highs, I would expect this to be one of the first ones to go, kind of lead the charge in that sector. Earnings are out of the way, a decent earnings report. So keep an eye on IRM. Shell, if that wedge does hold in the energy sector, and it does, it is kind of a support buyback area and it doesn't roll over lower. Shell, through this 62 looks pretty good. It's nothing on an all-time high breakout, but still one that's been setting up for these a couple months now. A couple others, we got this Visa and credit card debt at all-time highs, and that looking like a trend that's not going to change anytime soon. We have this Visa that's been flagging out for last month. And we can see going back to almost 2021, this has been a pretty significant level. Again, not a blue sky breakout, it's not all-time highs, but still very relevant level here, and a very tight flag over the last couple weeks now. And this MU is just nuts. I know we were talking about this one a couple weeks ago.
Well, yeah, here's what I wanted you to type up when you're going over sectors. Type up SOXX, the semiconductor ETF. And it's like, we're talking about people talking about, Nvidia overvalued, AMD overvalued and stuff like that. But look at the sector strength. Made a move, pulled back into a previous support area, and now it's like, great consolidation. Now it's working its way higher. Strongest sector in the market today. So, AMD is on a momentum run right now. They look pretty good. The LRCX, it's not technically a semi, but they kind of semi. That was the trade of the week this week. That looks great. And Nvidia looks like, obviously it could pull back from here, but it's just not,
Yeah. This is where it's like when it's like the overvalued talk, and again, it has run up 100% this year, but basically it's like there's like a magnet on the retest. It's like this is just it's in this breakout stage until it gets pretty much up to this retest. That's like this could be the area where it could top out, but it's like this is just the trend's your friend, just trending higher. And every time you hear like the overvalue, it's overvalued, it's kind of too much, and that's always when you're not in it and you wish you were in it. But that's the move it's been on. Just like on the way down, when it is a great value and it becomes an even greater value with time, it's like very obvious, breakdown stage, very obvious breakout stage. So it's like with these names, it's not fighting the trend, but it's like for us with MU in particular, it's just like so hard to get in. Like this hasn't got into its breakout stage. It's still in that base, and it should have that move eventually, back to highs, back to 100. But it's very difficult today. Like today's this technical entry 64, but it's so hard to buy it when you're 5% late on the day. It's like, when you zoom out, it looks easy, but the day-to-day stuff, it's very difficult to just buy it, this day. Just trying to find
yeah. I'll likely buy that one tomorrow. Small, give it the room it needs, and then if it sets up for a better entry, that's when I'll look to add. But if it doesn't, let it go without me type thing.
Yeah.
And it's really like, what else can you do in that situation? You can't go super heavy and give it the room because the risk reward is just not on your side. You just buy it small, give it the room, and hope it gives you another opportunity. If not, move on.
Yeah, definitely agree. I'll stop sharing. Any other names you want to go over?
Yeah, I'll go over a few. Few. So we're seeing a lot of these names come back, right? We're seeing a lot of Shopify, huge earnings, name came back. Not even huge earnings, just finally out of the base, finally seeing growth again. Shake Shack, similar story. There's Uber is just another one. So these names, it's like, we gotta wait for weeks and weeks of digestion for them to come back. But then another name I'm looking at is Dash. Someone mentioned this today because we were looking at 65 for an entry and we couldn't get it last week. It just ran without us. Now it's pulling back to that area, turned out 65 into new support. And if you remember this 65.31 high, this was earnings day. So that becomes a very important price point. So now it's holding the 65. It's kind of giving us some momentum entry tomorrow if it wants to break higher through that 67. We're seeing these names come back. It's not my favorite chart location long term, but if these names want to come back, they have been basing for months and months and months, and they could definitely be ready. For a long-term account, I'm buying some of the CP right here. Just absolutely massive, massive base. This one will take months, if not a year, to play out. So it's a much more macro setup. This isn't something I'm buying in my active account and trailing with a tight stop. This is something I'm buying 83 small, giving it huge room and just letting it work for months and months as long as I can. I mentioned we bought this LRCX today. This is like the perfect entry. Like you couldn't ask for a better entry for a macro setup than this LRCX gave. And it gave us some clues Friday. Friday, market opened higher, sold off in the morning, and then recovered late in the day. Ton of information in that, meaning if the market really wanted to sell off, it would have just either puked today or kept puking Friday. The fact that it recovered it, Bears were giving us everything they got last Friday, and they couldn't maintain that selling. So LRCX got held down, but then today, right off the open, bam, it explodes higher. It's up 5% on the day. And this thing's just getting started. I'm not looking to kick this thing, until it's retesting. The next real resistance is like 612 area. So I'll look at 600 for some kicks. You got to take kind of a macro view with this setup. Yes, it's up big today, but if the setup is right, it should just be getting started. So that one looks really good. Talk about Dash. This TTD, another one of these names that's come back. We're seeing like Snow, for example, that one launch padded since earnings. Same sector as TTD, Trade Desk. Gapped up on earnings, could not handle the move, and now it's kind of coming back into the support area. 2 inside days. Check out an hourly chart. If we can get over this 65, I think that could be a good entry for this thing. So there's a lot of names out there like that. I'm not, again, overly excited about anything. I want to see names like this Duolingo, DUOL. Breaks out to new highs on earnings after, finally breaking out this huge base. Now it's breaking up to new highs, and these internet names like Spotify, like Duolingo, actually the number one performing sector this year. Believe it or not. So I'm waiting for things like that to set up, and then I have this huge list of earnings names of things that have just gapped up like crazy, and we're just kind of waiting for them to come around. I have a lot of charts like this ESAB where it's looking pretty good. Just needs some more setting up. That one looks pretty good through that last pivot. This IDXX looks pretty good through this last pivot. Now it's just waiting for these names to come around. So not a super super active week I'm anticipating, but there's a ton of names where I'm tracking them very very actively and think it could lead to some great trading in time. So overall, we'll see what happens with this S&P range. There's really not huge news in the market for another month. Obviously, we're going to have the CPI, the economic data. We have all these Fed speakers, but the Fed June meeting is a month from today. I think it's June 15th. And that's going to be, they haven't told us whether or not they're going to pause raising rates. The market's just pricing that in. So that becomes the next big event for the market is the Fed in the month. We got some CPI. We got all those metrics in between. And it was funny. We sold off Friday. It's like, some these metrics, that's the most frustrating part of where we're trading right now. It's like sometimes these metrics matter, sometimes they don't. The Michigan Consumer Sentiment Index came out Friday, right before the market opened. And that had the huge reaction to stocks. And that was, I hate to say it, that was based on the debt ceiling stuff. And that's what caused the market to sell down lower Friday morning. But, we get this debt ceiling stuff handled. It's going to be all forgotten about very quickly, which is what we both anticipate to happen. We know that's going to happen, but that, the political game of posture.
The song and dance. Like we're going to
song and dance, we got to have the song and dance, and that could lift the market, lift and drop the market 2% and 3%, no problem. So on a very short-term basis, it's like, yes, you have to pay attention to those headlines, but on a long-term basis, we all know what's going to happen. It's the political posture is like just disgusting and annoying, but what can we do? So overall, stuck in this range, lots of good earnings names I'm waiting to set up. Not super, super active right now. Got a bunch of names on, but keeping an eye on a million different things.
All right, man. I think
I think we wrapped. I mean, it's tough to have major conviction up here. We've just chopped around, done nothing for 3 weeks at the top end of this range. Nothing's really changed. We saw CPI come in lower again. We got that hopefully final rate hike out of the way, but it's all, it's all speculation at this point. about what the Fed's going to do. So waiting to hear on that. Nice little end of day pop there in stocks. That's it. It's back and forth trading until we get some clear direction.
Very true. All right, I think that's it. We're done.
All right. ON. What are these earnings going to be? With that, folks, we'll catch you guys next week.